Hello and welcome. Moss Adams is pleased that you joined us for today's session, Navigating the Landscape of Tax-Exempt Hospitals. Before we begin, I'm going to play our housekeeping video.
Welcome and thanks for joining us. Moss Adams webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves, and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and we have 3 presenters with us today from Moss Adams. We have Lauren Haverlock, tax partner, Amy Hendley, Tax Senior Manager, and Eric Lucas, Healthcare Consulting Managing Director. Their bios and contact information are located in your webcast console. And now I would like to turn the floor over to Lauren to get us started.
Thank you all so much. Thanks for being here today. We're really excited to have this presentation and talk a little bit more about tax-exempt hospitals and the charitable element of these tax-exempt hospitals and the charity standard that is kind of connected into that. So, just to walk through our agenda today, we're going to initially provide some context on the path to the charitable hospital status. So, what has led to where we are today in terms of that. Next, we're going to look a little bit at community benefit and the community benefit calculation more specifically, high level, what shows up on the Form 990, and then dig back and kind of peel back the curtain a little more to those numbers that show up on the Form 990. And finally, we're going to compare that and talk a little bit about the value of tax exemption. Because as we, go on to the next slide, we're going to talk about more, an introduction as to why this topic is more important than ever. But before we get into that, we do have a polling question. And as the video stated at the beginning, polls are important. So go ahead and answer them and take it away, Amy.
All right, thank you. So the first of the 4 polling questions is to get a feel for our audience. Are you a not-for-profit hospital or health system? And this one's easy. It's either yes or no. And the polling questions are located right on the slides that we're presenting. So if you can't see it, you may need to hit the F5 key to refresh your console.
And as we talk a little bit about that, we did get a question that's already come in, and we do really encourage these questions. Somebody asked about, they are both a public hospital and a 501c, and the question is, do these standards apply to them? And public hospital, I'm guessing, means a governmental entity. If you're a governmental entity and you have charitable status under 501c3, these standards generally, would apply to you. The 501R would apply to your organization, and to not have it apply, the precedent that we have, shows that you would have to give up that 501c status. But that's kind of a more detailed question for another day. But yes, if you do have that determination letter that states that you are a 501c3 organization as a hospital, this all would apply to your organization. So the answers are up on the board, and we're going to go into some of the headlines that are out there right now. The reason that this is such an important topic is because in the past couple of years, there's been just an uptick in scrutiny on tax-exempt hospitals coming from both the media as well as, the governmental organizations that are out there, whether it be the IRS, states attorneys general. They're focusing more on the value that tax-exempt hospitals provide compared to the charitable benefits that they give to a community. What we see in a lot of the headlines that are out there are that, nonprofit hospitals are putting profits over patients. They're not providing enough community benefit standards. They're bringing in all this money and being subsidized by the government. And where these are all coming from, where these numbers and calculations are coming from, are the Form 990 itself. That charitable community benefit numbers are showing up on the Form 990. That's the information that these news outlets and these different sources are using to compile these headlines here. Furthermore, recently we've seen coming from the federal government, this has come from the House Ways and Means Committee as part of their discussion about ways to, raise money for the tax cuts that are coming down the pipeline potentially with the extension of Tax Cuts and Jobs Act. They had, said this isn't law, this isn't anything that's been proposed, but there was a reporting of different ways that the government could raise money to offset some of the costs of tax reform. Not to go into too much detail, but the Tax Cuts and Jobs Act of 2017 were essentially created through a process of budget reconciliation, which only extended things over a 10-year period. So now they have to come back to refresh some of these provisions, and they're looking for ways to raise revenue to offset some of the costs that are connected with that. And one of the things that was noted was to eliminate the nonprofit status for hospitals. So that's something that, is stated could raise $260 billion over 10 years. And that calculation has come from kind of that tax value that's provided when the IRS, when they have the government reports of the net income of those tax-exempt hospitals. So that $260 billion is, what they propose could happen if the government were to eliminate the nonprofit status for hospitals. So probably not going to happen. However, it just highlights that this is an area of exposure. With the Tax Cuts and Jobs Act in 2017, there were taxes that were levied on universities, on compensation for nonprofit organizations, and those became permanent revenue raisers. Compensation over $1 million is taxed, for nonprofit organizations, and colleges and universities have an endowment tax if they meet certain thresholds. So it's not unimaginable that the IRS could, with this next round, put some standards connected into community benefit and tax exemption, potentially, levying some sort of tax. We don't know, but it just shows that is that's in the mindset of, those government regulators. we know that the benefits to society of tax-exempt hospitals, and we thought it was important to put this at the beginning of this, is we know that the benefits of tax-exempt hospitals, the nonprofit hospitals, go beyond community benefit. And we just wanted to include a slide that shows some of those benefits that are not quantifiable in that community benefit calculation. You know, nonprofit hospitals don't have owners. They are providing services where a for-profit hospital might not want to provide those types of services. So there are a lot of services that aren't profitable. You know, having a 24/7 emergency service or emergency room might not be profitable for an organization that's focused on that, but for a tax-exempt organization, you know, they might be able to, you know, factor it. They would have to factor that in and staff it and not worry about profits to owners. There's more access to care for all and other types of benefits that don't show up on that community benefit number, but that organizations, you know, hopefully are highlighting. The costs, Amy, when we go through this, Amy Hendley, one of the presenters, will talk a little bit more about the quantifiable cost to society that tax-exempt hospitals have. And that cost really focuses on the subsidies that are provided from, you know, no tax, no income tax, no federal unemployment tax calculations, property tax exemptions, state and local tax benefits, things of that nature. So we'll look at those in a little bit later. But, you know, that's one of the things that beyond charity care, we just feel it's important to highlight that we know that there is beyond that number here. All right, so before we get into, you know, our next section that talks about the path to community benefit, how we got to where we are today, another quick polling question.
All right, so the second polling question is, are you facing challenges to demonstrate or account for the value of your contributions to the community? And your options are A, yes, B, no, C, sometimes, or D, not applicable. And then just a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions.
All right, so as you answer that question, you know, I'll just continue to speak a little bit more to the path. So healthcare in and of itself isn't on its own part of, you know, the definition of a charitable purpose. Really, you know, when we look at charitable purposes, and once we get through the slide, I'll go along to the next slide, we'll see that, you know, there's education, you know, testing for public safety, religion, scientific, and then, you know, charitable just overall. Healthcare fits into that charitable standard overall, and where the definition for charitable has come from is kind of a long statutory and regulatory history, starting in the early, you know, 1900s. Let me move along to that. So there's a nice little icon that shows those charitable, kind of that charitable purposes that are out there. But really, you know, prior to 501R being enacted, and we'll talk a little bit more about that 501R standard, that's what was enacted in 2010 to formalize what a charitable hospital needs to do to maintain their charitable status. There was just standards created through various revenue rulings and other commentary that enhanced and provided what charitable means in the hospital setting. Hospitals originally, you know, before the 1900s, their hospitals were institutions that essentially were usually connected to churches, set up to care for the sickest and poorest people in the communities. But as they became more formalized, there needed to be some more definitions as to what was, you know, charitable in terms of the hospital setting versus not charitable, which could be a for-profit hospital. So overall, over time, the IRS recognized that there was a type of charitable healthcare, but that charitable healthcare really was focused on providing commitments to serving the communities, for providing health to those with limited means, and creating more of a community benefit where hospitals are serving the community in ways, not just through free treatment, but through other ways. In recent years, in the early 2000s, there started to be more of a vocal opposition to hospitals that were potentially not providing that type of care to the communities, which led to the 2010 enaction of 501R, which is what hospitals now will know of as the Community Health Needs Assessment and other standards there. So that's been in place for the past 15 years. And just as a refresher, what is required as part of 501R, and this is what we currently have as the standard for charitable healthcare. Organizations, charitable hospitals have to conduct a community health needs assessment every 3 years, where they survey and get those charitable needs within the community where they can connect in and be that interplay between what the community needs and what the health system is providing. But there also needs to be certain policies and procedures in place that ensure that those who qualify for subsidized care are able to access that subsidized care and understand that they won't be turned away from care at a hospital, so that it encourages those who need the care to go and seek the care at the hospital. It also limits the charges that hospitals can levy on individuals and discourages certain types of extraordinary collections, and then have other types of policies connected into that emergency medical care. The teeth that exist are kind of where the rubber meets the road here. There's not really accountability in 501R for meeting community benefit standards. The real accountability that exists in 501R is that there's a $50,000 penalty for failure to comply with the community health needs assessment standards. That would be, assessing the needs of the community and then having a strategy to implement it. But actually implementing it or actually meeting those needs, there is no teeth in 501R connected to that. There's no standard for community benefit as well. So there's not like a certain amount that a hospital needs to meet in order to satisfy 501R. And so that is, how we've gotten where we are today. There's not really a standard for what a hospital should do or shouldn't do. It's not noted there. And that, might be intentional because, as we said earlier, there are a lot of things outside of just community benefit that a hospital can do to demonstrate they're serving the community. But, there could also be some drawbacks in terms of, the public media and other sources saying, this is a good community benefit number, this is a bad one. And hence, this hospital is doing better than another hospital. So that's, what we'll go into in the next couple slides is we've said that word community benefit a bunch. We've talked about the 990 and the reporting therein, but we'll now see, and Amy will take it over from here, we'll now see a little bit more about how that number is calculated, what goes into that number, and then, what you might be able to do to find ways to enhance that number or to verify that that number is accurately reflecting the community benefit that you are providing. Before we go into that, we have another poll.
All right, thank you. So the third polling question, is your organization preparing for an increased scrutiny on your tax-exempt status? A, yes, we are. B, no, we are not. Or C, I don't know, or not applicable. And then for those of you that would like a copy of today's slides, you can download them now from the console. And then we are also sending them out via email tomorrow, along with a recording of this webcast.
I do just want to note before Amy dives into it, and then we hand it over to Eric, we could probably talk a full day on these standards and this form and the requirements and community benefit calculations. You'll see there's a lot that goes into it. So this is just a high level, touch point here, but please feel free to ask any questions. We'll try to get to them. An hour is a really quick amount of time to go through all of this, but we'll get back to you if you have questions. So please feel free to throw them in the Q&A. All right, so Amy, do you want to talk a little bit more about that community benefit calculation?
Yeah, thank you, Lauren. So just to frame things, we kind of want to talk high level about some of the components of the community benefit calculation that are the key elements. Many of you are going to be familiar with this if you've been subject to 501R for the past 15 years or so. So charity care costs really cover the amount that's provided on a free or discounted basis to individuals that qualify under that financial assistance policy that Lauren spoke about previously, and or that's otherwise provided. You have your unreimbursed Medicaid, and so this is the difference between the actual cost and the allowed cost of Medicaid. And we have seen over the course of the last couple of years with DSH payments and so forth that these shortfalls have been lower than they have been historically. Then we have community health improvement services, and that kind of includes a bucket of different activities. A lot of these are community activities or programs that seek to achieve a specific community benefit objective. These are also programs to generally improve health within the community, and so they're not necessarily generating inpatient or outpatient revenues, but really are just to improve the overall health to reduce the potential for medical services being needed for prolonged or chronic issues. Research and education includes different activities related to the study or investigation of different health issues and providing that information on a generalized basis to the general public. And this is going to be funded by either another tax-exempt organization or a governmental entity. And then education includes programs that result in the furtherance of degreed or certificated individuals that practice in the medical field. And this should be for activities that don't just include a hospital's employees or medical staff, but has to also include the broader community at large. And then community building activities, which are reported separately, are some of those other activities that the hospital is providing to the community that it serves that may not necessarily qualify as classification as community benefit, but clearly is helping to improve overall general outcomes and the health of the communities that it serves. For those of you familiar with the community benefit calculation and how that shows up in the Schedule H Part 1, this is the table for the financial assistance and certain other community benefits at cost. And what we have for columns A and B are estimated numbers of the activities that are the programs or activities that are operated under each of these 8 buckets, as well as the estimated number of persons served. And these are optional fields. We do see some hospitals complete this, and it does provide some context for the overall net community benefit that you're providing to the community. Column C is the expense that you've recorded, and we're going to look at some of the background for that with Eric and in some of these later slides. But we're looking at the total expense that was incurred by the hospital to provide these programs on the left-hand side here. And then each of those programs that does have any revenue that's generated as a result of providing those services needs to be calculated and reported to bring us to our net community benefit expense. And the calculation that we are looking at for the most part is the percentage of net community benefit expense over total expenses as reported in your Form 990 Part 9. And so each of these different line items has a separate worksheet that is incredibly complicated. There are a lot of different data sets and reports that are coming from different areas of your hospital, different information systems. It'll involve folks that are involved with your community benefits reporting, as well as the individuals in your cost reporting group. And so we don't want to belabor the fact that there's a lot of detail going into this, but the one percentage that's showing up and that people are utilizing on your Schedule H is coming from all of these different data sources and then aggregated to come up with your community benefit calculation percentage. And then the community building activities, which are things that are not formally included in your Part 1, Line 7 calculation of Schedule H, are often overlooked, I think, by many hospitals because you're heavily focused on that more publicly scrutinized benefit calculation. That is something that the public is looking at a little bit more frequently. Hospitals can and should take advantage of documenting and reporting the activities that you are already providing to help with community supports. A lot of times you're doing these things in the community, but they're not necessarily being captured and reported out to the public. Some activities that are likely being undertaken but have historically just been underreported. So different types of economic development activities, community supports that might include childcare, mentoring, improving leadership in your community by providing civic, cultural, or language programs, medical interpreters for the community. So really digging down into some of the other activities that the hospital is providing and figuring out which bucket these sit in so that you can report out on these activities will be helpful just to, again, support the tax exempt status for the hospital. Now we're going to turn things over to Eric.
Thank you very much. Hello, I'm Eric Lucas. I'm not a tax expert, so I'll come off the bat right now. I'm a leader in our hospital reimbursement consulting services. I originally was involved in Schedule H back when I was working with the health system, and a tax preparer came down to my office and asked for information from the Medicare cost report. And the request itself wasn't terribly surprising. I had been involved in community benefit reporting for years, and so the request for information along those lines wasn't too surprising. We provided it and moved on. But as more scrutiny over this reporting started to hit media, Congress, we definitely started to take a deeper look and ensure that what we were reporting was appropriate, it was meeting all the needs. And through that exercise, I started to realize that there's a lot more complexity here than just pulling something off of the Medicare cost report. So I wanted to start from that position because since I've joined Moss Adams a few years ago, I've been able to work with a number of our tax and cost report clients to talk about these issues. And I want to share some of the findings through all of this that I've managed to pull together. The place that I want to start, though, is recognizing that there's a lot of similarities between Medicare cost reporting and what's reported on Schedule H. However, there's a lot of differences too. And so the first suggestion that I would make, providing tips and tricks through this process, is to ensure that communication is solid between what is being asked and what is being provided. And as your cost report preparer is probably well versed in understanding government regulations related to financial reporting, I would strongly encourage you to have them read those instructions. Somebody just came through indicating that they can't hear anymore. I want to make sure that others can. Can I get a thumbs up?
I can hear you.
Thank you. Nothing worse than speaking into the cloud. So, so understanding, reading those instructions will help the reimbursement person understand what is actually being requested there and can communicate where some of those differences might be. Because there are definitely differences in the way things are reported. I mean, the fact is, though, that if you read the instructions, it refers to a Medicare cost report on a couple of occasions, and that might lead you to think, okay, I could just pull this amount off of a cost report and plop it here, which you can do, but you in doing so might be understating your overall community benefit. So I want to talk a little bit about some of those differences. The first I want to talk about is the idea of a ratio of cost of charges, because everything we're doing here is identifying a cost element and going to a reimbursement person. You might one of the first things you might ask for is a ratio of cost of charge, recognizing that what the Medicare cost report is doing is very different than what Schedule H instructions are doing. While they might come out the same, it's more like the ratio is going to be different, and understanding why those differences exist will help you in understanding all of the information that's being reported there. The other thing that I want to talk about here is there's real opportunity for efficiencies with an organization that's approaching Schedule H because of the fact that there is a lot of overlap with the cost report. A lot of the work that goes into identifying what costs should and should not be included, while somewhat inversely related at times. You can do that work once by just reviewing all of that and identifying what's for the cost report, what's for community benefit reporting, and documenting that in a way that helps you to reconcile the differences in reporting between the two. The other side here is understanding all the government programs that the hospital is getting payments from. For example, there's a lot of programs that come from not just federal, but from state and local as well. And if you have internal reimbursement support, or if you utilize somebody externally, getting them involved to help explain what these programs are truly intended to do will help you to ensure that you're reporting information on the right line. Sometimes it's not quite as clear at what the program's intentions really are. And then finally, having a really strong understanding of the revenue reserve accounting that's going on, because in some cases we have commingling of amounts that really need to be pulled out from a Schedule H perspective. And so understanding what's in these accounts is a big part of ensuring proper reporting. There we go. Amy did a good job of laying out some of the elements here. The Schedule H is voluminous. There's quite a lot of information that you're reporting here. I'm really going to kind of focus on what's included in parts 1 and part 3. But I would encourage you to look in some of these other sections as well. Part 1 and 2 are going to be the big elements in calculating your community benefit. And so it really is where you need to spend a lot of time to ensure you're getting all of those amounts. But I wouldn't sleep on 3. It's still a very important bit of reporting that could actually influence how things are handled in the future, as we'll get into in a little bit. And parts 4 specifically will help to identify other entities within your organization that actually should also potentially be included as you're gathering your community benefit expenses. So let's start with the accounting principles involved here, because I think Amy did a really good job of identifying what information needs to ultimately be pulled out. We need to take the total community benefit expense for all these different categories, and then we need to offset any revenue related to those programs to come up with a net community benefit. And understanding what you're reporting here is simply that negative expense, that net, that loss, if you will, the net community benefit. If there's any gain here, you're not reporting that element. So let's start with that. You're really looking for a net community benefit. To focus then on how do you identify the costs, there's several principles you want to consider. Number one, you need to make sure it's actual costs, and these are the costs as you're reporting in your financials. So you do not, and I get the question a lot about what about estimating costs for X or Y? No, it needs to be an actual cost, an allocation, or an estimate based on an actual cost and how to break that out, certainly, but an opportunity cost would not be included here. Similarly, capital costs, you need to ensure that if it's a depreciable asset, you're not including the entire cost of that capital expenditure in 1 year. It follows the same mechanisms as you do in your financial reporting. You want to use a system that ensures you have the most accurate costs. I tend to advise, if there's a good cost accounting system, to potentially use it. You might get better results overall, and it might be a little bit easier when you start to break down some of these categories. However, that's not always the case. In some cases, there's transparency issues in the cost accounting system that might make that a poor substitute, because you might not be able to hit some of the other priorities. So it's really important to evaluate what different options are available to you and utilize the best one. This is one area that I probably see the most often, that is hospitals not including indirect costs and overhead costs on all of the items where they can. There certainly is a few examples where they should not be including overhead, but in most cases they should. And I see in a lot of cases that being excluded from certain line items and therefore underreporting the community benefit. And by the same token, the one area where I see overreporting is in the double counting, and that is reporting the same cost on multiple lines. This can happen if you're utilizing different methodologies to identify costs, or it's just not understanding from different sources for the cost, not understanding that the numbers are being reported differently. And then finally, when in doubt, use general accepted accounting principles. So we talked a little bit about the costs. Here's what the IRS identifies as reasonable methods, the cost to charge ratio. There's an actual table within the instructions to use. And in most cases, that's what we see hospitals utilizing. You can also use a cost accounting system. It does mention using cost reports, although there's a lot of reasons why I would suggest not necessarily doing that and instead using one or two. And 4 is some type of hybrid approach or other approach that helps you to get the costs. I think the most important thing here is making sure that whatever approach you use hits those other priorities, that it's giving you the best expense potentially or possible, and is transparent enough to allow you to demonstrate that the costs are not being duplicated in multiple lines, and that you've got your the full cost available being reported. In looking at the cost to charge ratio, as I mentioned earlier, this is a concept that your cost per preparer is well versed in. Cost to charge ratios drive how the costs are calculated between programs in the cost report. And so if you mention that to them, without any other context, they'll say, sure, I can do a cost to charge ratio, and here you go. But it's not necessarily what a Schedule H preparer needs. And so it's important to understand the differences between the two. There are a lot of similarities though. So as you're calculating what should be in the Schedule H cost to charge ratio, one really good source is the cost report itself, and how cost report preparers are identifying costs that should be removed because they're not patient care related, and revenue items, and how they're addressing other operating and non-operating charges, and how those are included in the cost report. They will be handled differently, but identifying those amounts will help in the preparation of the Schedule H cost to charge ratio. That we'll talk a little bit. There's one other item here when it comes to the cost to charge ratio, and that is related to Medicaid, but we'll talk about that on the next slide so we don't overcomplicate this. The one thing on the cost to charge ratio though is following the template will help you to ensure that you're not duplicating these costs on multiple lines. So I'll point that out. So starting with the first 3 lines of part 1 of the report, and where you'll see a lot of the community benefit reporting. The first, of course, is financial assistance at cost. The process involves identifying gross charges that have been written off to charity, and applying the cost to charge ratio or your cost accounting system to bring those down to cost. There's 2 things I tend to see here. Number 1, there's multiple areas of reporting uncompensated care and charity care across different sources. We file it in the cost report, Medicare cost report, there's state reporting, there's community benefit reporting. And the thing is, a lot of them have different instructions. So you're publicly submitting quite a lot of information about charity, but the numbers could be different. And understanding those differences is important because the programs are trying to do different things. And it's important to be able to explain why those numbers would be different. But from the purposes of Schedule H, one of the first things I do is kind of look to see on the Medicare cost report, what is it over there? And then why would it be necessarily different? A lot of cases, it comes down to the financial assistance policy. And as part of our cost reporting process, we tend to want to review the financial assistance policy to make sure that all opportunities for reimbursement are being taken. The similar thing goes here. It's advisable to take a deep dive into financial assistance policy and ensure that all the amounts that are being written off for charity are consistent with industry, recognized the charity element that ultimately can be reported here. There's certainly cases where a hospital might have a self-pay discount that's outside of the financial assistance policy, and maybe it's an automated discount. In these cases, we want to make sure that they have processes so that if ultimately that patient is complying under the financial assistance policy or eligible under the financial assistance policy, that those amounts are ultimately calculated correctly so that the overall charity is being included there. Yeah, the final question I get here a lot is related to bad debt, question of whether if the amount hasn't actually gone through or been identified as a charity amount, could it still go here? The rules are pretty clear that unless it's going through your general standard approach of identifying whether they fall under the financial assistance policy, it shouldn't be recorded here. However, there could be accounting issues that would lead to that. And in those cases, moving those amounts might be appropriate. It would require more work and some disclosure in your documents to explain why you're doing that. But you do have an option later on in the report to identify amounts where you weren't able to fully demonstrate that they meet the financial assistance policy. There's some missing information. You believe that they probably are complying with the financial or eligible under the financial assistance policy, but you cannot meet it under the processes that you set up. You can identify those amounts in a later part of the report. It doesn't become part of the community benefit ultimately, but it can certainly help send that narrative that there is more opportunity here and ultimately help you to establish processes and procedures that ultimately hope to grab those in the future. Moving to Medicaid, one of the issues that we continue to see popping up lately is with Medicaid is how supplemental payments are impacting this calculation specifically. And it's not uncommon, given how some of these things work, to actually see a gain in this. After years of just understanding that Medicaid operates on a loss, I will get calls saying, I'm looking at a Schedule H and Medicaid is operating in a big gain. Like, can you take a look at this? And it is possible, given how reporting of supplemental payments falls into this and other areas that could ultimately impact that number. Timing issues with approvals by CMS for these programs could lump up multiple years into 1 year. So it's an area that certainly is important to take a deeper dive into. Another aspect of this is that a lot of programs look like they're Medicaid programs, supplemental payment programs. And yet when you dive into them, you realize that it's not actually reimbursing for the cost of Medicaid, but instead it's reimbursing for the cost of uncompensated care. And when that is specific in that nature, the amounts actually shouldn't be in Medicaid. They should be in the financial assistance section. And so if it is an uncompensated care pool, this is where it goes. And so understanding those programs and what they're intended to do is extremely important. And then the final point here, and you'll see in the instructions about provider taxes, Medicaid programs have provider taxes where the hospital pays an amount, that amount ultimately gets matched. It becomes the state's contribution that gets matched for federal payments, and then those payments come back down. Depending on how those things are structured, could mean that all of those amounts need to stay within Medicaid. And I've seen hospitals and systems allocate these amounts out across payers. Undoing that and getting them back into Medicaid, then it becomes a priority to make sure you're stating your Medicaid number correctly. And then finally, there's an item here for costs of other means-tested programs. I get the question, does that include programs like TRICARE? It does not. It does not include Medicare. There's fewer of these now that the Affordable Care Act has passed. I think it kind of got rid of some of these programs, although they continue to be out there. You'll see them in county plans and trauma programs in cities. It's usually those kind of localities that might have a program like this, provided that they are a means-tested program. You want to take a look and make sure that they can be included. So I'm going to talk just quickly about some of these other benefits. I think Amy talked a little bit about them, but there's a couple things I just want to point out. Number one, we talked a little bit about the development of a community health needs assessment. The cost of that and putting that together, which could be a big deal, would be allowable as a cost in this section. Also, attending meetings and conferences related to the development of this and for these community health improvement services is an allowable cost as you're working through this process. And one of the things, I'll bring it up here because I failed to do so earlier, but it's important if you're part of a system to recognize that to not ignore what's at the system level as well. And one of the things that as I'm working through this is I see a focus on, maybe a 5-hospital system, and all 5 hospitals are being reported, and they've done nothing with the system costs where a lot of these community health benefits reside. And those need to get down onto the Schedule H as well. And then on this, remember, and I could say this on the financial assistance policy too, grant funds that are restricted for a particular purpose, those would need to be included on the line that related to. So if it's a restricted grant for uncompensated care, that would be reported from this line item. I see a question about Medicare Advantage costs. That is not a means-tested program. If I'm answering that correctly, I hope I am. But if the question is Medicare Advantage included in the other programs, it is not, nor is Medicare fee-for-service. Those are not considered means-tested programs. And there is a section later where we'll talk about Medicare. Really quickly on health professions education, because this is one of the areas I end up spending a lot of time on, because there's a misunderstanding about what this is and what the cost report's trying to do. But you can include the cost of these medical education programs. Understanding GME is direct medical education. That cost is pretty easy to see on the cost report, the Medicare cost report, to pull that in. It should not be confused with the allowable costs that you might see later in the cost report. So make sure you explain exactly what it is with your cost report preparer, what you're looking for. You need the cost of these programs, and you need to include the overhead related to those programs. IME is indirect medical education. That's not indirect cost. That is a different reimbursement type. And so the revenue related to that is not to be included in this calculation. That is excluded here. So understand we're really focusing on the GME element. The other focus here is not ignoring, I apologize, as a reimbursement person, I put in an acronym and I shouldn't have, but NAHE is Nursing and Allied Health Education. So pastoral programs, nursing programs, these type of programs are also allowable if these costs reside in the organization. And so identifying all of these type of costs, there certainly are limits to what can and cannot be included here. But if you have one of these programs, you should certainly be looking to see what can be reported, what should be included here and reported. Okay, so this is probably an area that's the most underreported. Like I see it a lot. so that when I ask the question, they think, oh, I don't think I have any of that. And then when you start talking it through a little bit, they'll say, oh, you know what? I think I probably do. This is for types of care where the organization might be providing this at a loss. This could be a clinic that you have, a lab, it could be an emergency room that you're providing because the need exists within the community. But you know that the process loses money. Now, this takes a little bit of work, and I think it might be why it's been ignored by a lot of organizations in the past. But this really is an opportunity if you know that there are types of things that your organization are doing within the community that is losing money. This could really identify a great deal of additional community benefit. So to talk about this and why it's so complicated, there's a template in the schedule, and you would have to do this for every type of service that you think is being offered at a loss. And because you don't want to duplicate from the other line items, you're identifying the charges, and then you're backing out bad debt, Medicaid, and financial assistance from the calculation, which those amounts are being reported elsewhere, in order to calculate what the loss allowable on this line is. It does happen, though, that you can start out with saying, okay, this clinic is operating at a loss. Ultimately, when you go through this calculation, it's actually at a gain. When you pull out Medicaid and some of these other items, the loss goes away. In that situation, there is nothing to report here. Quickly on research, not all research qualifies. So make sure that it's meeting the criteria for what qualifies on this, whether it is coming from a tax exempt or government agency. Indirect costs are allowable. And some people I know use the indirect cost proposal rate, which is allowable, and including here, identifying any royalties received in the year to offset against those costs is required, but recognize that and I think what I see typically is you see research, you throw it in there. A lot of research does not qualify, so make sure it's a program that does meet the requirements. And then contributions, make sure that they're restricted for a purpose that falls within the community benefit reporting, and don't ignore in-kind donations. So offering to space within the hospital for community meetings, provided that you can identify a cost and allocate costs towards it. You can include that here, so in-kind donations are certainly allowable. We had a slide earlier that said do not sleep on these issues. Rather than going through all that, I would agree when you look at the information that's pulled from all of the hospitals, you see very little being reported here, and it's probably one of those areas where there's a typical hospital within a community is doing elements of this stuff, and it really should be reported. So I would encourage you to do it. The one thing from a reimbursement perspective I'd point out is most of these items are non-allowable for cost reporting purposes. So if they're already being identified, if they're on the hospital cost report, they're already being identified in the amount. So it's just a matter of going through those and plopping them here as an allowable cost, and where appropriate, making sure you're putting your indirect element on top of that. So part 3, bad debt, Medicare, and collection practices. The one question I get here is this included in the community benefit? And unfortunately, no. They do ask if you are operating Medicare in a loss, and many do, especially since we've seen the growth of Medicare get outpaced by inflation. We see Medicare operating at a loss in a number of hospitals. And so although it's not being included in community benefit, you do have the ability to include in your narrative in a later section of the report why you think it should be. And if you're one of those hospitals, I strongly encourage you to advocate that this be included, to ensure you're presenting the best community benefit possible as Congress looks to continue to evolve their policies here. I think it would be important to point those things out. There's quite a lot about bad debt reporting. One of the things I mentioned earlier is the question of whether you believe part of your bad debt should ultimately be part of the financial assistance. That's really information only. It's basically saying, is there some of your bad debt that ultimately might have fallen within the financial assistance policy, except for the fact that you were not able to pull all of the information available. And it doesn't do anything with the report other than potentially trigger that some additional work needs to be done. And then I wanted to leave it off here with the final question I get for entities where there's multiple hospitals or multiple entities, and how you handle all of that. It's really kind of vague. One of the things that the instructions say is if the net expense is less than zero, if it's a gain, you take it off. Well, if you do that on a hospital by hospital basis, then you might be overstating your number. There's really two options here. You could add all your hospitals together or all your entities together, and then in that final column, you can remove any gains, or you could do that at the hospital specific basis. The general thought here is that you do it in the aggregate. However, the rules here are kind of vague, and so if you do have questions about it, it's worth making sure you're explaining in your process, in your narrative that they provide in part 6, how you've come to the conclusions you've come to. So I gave Lauren just enough time to get to the last slides. So let me turn it back over to Lauren. Oh, we have a polling question.
Yes, let's get to our last polling question real quick. So the fourth one is, which of these areas is your hospital or health system potentially underreporting community benefit in the latest filing? A, charity care costs. B, unreimbursed Medicaid costs. C, community health improvement services. D, research and education. E, community building activities. Or F, not sure.
So while you all look at those, the poll responses, we're going to take a little bit of time to talk about the last couple of slides without looking at them. So we have seen a lot of different studies come out over the last couple of years related to the challenging of tax-exempt hospitals and the value of the community benefit that they're providing versus the benefits that they're receiving from their tax-exempt status. And of course, the reports are across the board, right? Some of the reports will say, yes, of course, they're providing more charity or community benefit than the value of their tax exemption, and some will say that they're not. And so when you're looking at your own hospital, you really have to come down to the local level and, maybe do a quick, rough calculation back of the napkin to say, what is the value of my tax exemption? And think about the different tax regimes that might be that you might be subject to, but not for your tax exempt status. And Lauren had talked about some of those before, right? The FUTA exemption, certainly the big ones being income taxes, property taxes. Some states, depending on the jurisdiction that you happen to be domiciled in, will have sales and local taxes or personal property taxes that the organization would be subject to. And so our primary takeaway on this is just, can you put together something that's meaningful, that if you were asked what the value of your tax exempt status, the value that you're receiving for tax exemption, and whether or not that is covering the community benefits that the organization is providing on a whole, on an annual basis, and what does that look like over time, just to be able to again support the tax exemption that the hospital has. And then Lauren, we just have a couple of takeaways for folks, right?
Yeah, so we have so much content. We probably should have given ourselves more time on this one, but really, what the kind of high level summary is here is, first off, understanding what goes in. If you're looking at this and you're trying to say, where are we exposed? What's our risk here? The first thing you want to do is really understand your community benefit numbers and understand where they're coming from and what they represent. With that, looking at any of those anomalies that are jumping out, any timing differences, understanding what might happen in that year, and proactively communicating if there was something that could have impacted the percentage that shows up, whether it's connected to how your related organizations, if you're a system reporting on a single 990, how those related hospitals roll up together. Understanding if there's timing difference in terms of federal funding that's coming to support your organization, like we saw in COVID. That's going to be the first component. Then the second part would be taking some sort of step to understand the value of your tax exemption, the cost to the tax-paying community, to the government, and the subsidy from the government that's provided in terms of that tax exemption, whether it's property tax exemption values, income tax, any sort of payroll tax reductions that could happen. Comparing the two of those and communicating any difference that is occurring as a result of that. So understanding how they compare and filling in the gaps in terms of that knowledge to the general public. If there is a big value of your tax benefit and less of a community benefit, well, why and what is the other value that you're providing in terms of those non-quantifiable items that we talked through? And just discuss that with your insider. There's no actual reporting for this that's required externally, but just have that in your back pocket as knowledge, and make sure that your out-facing, story tells that that gap that you're filling in there. So I know that we're a minute beyond, so thank you all so much. I'm going to just conclude with, if you have questions, and I know we didn't get to questions, but if you have questions, reach out to any of us here. We're happy to answer that, and I'll send it along back to our producer to wrap things up.
All right. Well, thank you, Lauren, Amy, and Eric, for a great presentation today, and we are at time. But we also invite you to visit our website for more information. Some resources are linked in your handouts window within your console. And then if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. And finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. And again, thank you for joining us, and take care, everyone.